Good morning. Steve Reed in Chicago with the morning grain comments. Well, markets are lower. Beans down 12 cents, meals down 4, corn down 9 cents, with May losing ground to the July after testing new highs yesterday at plus 58 cents. Wheat's down 5 in Chicago. KC's down a penny, while Minneapolis is down 4 cents. Stocks are a little higher. Gold is a little bit higher, while the dollar is lower and crude is lower and trading below $70. So as far as the grains are concerned, again, we're taking out some weather premium in the marketplace, with markets being pretty much convinced now that we're going to have a normal 2023 U.S. corn, soybean, and winter wheat crop. We also note that we put some rain back in for the northern plains for next week, delaying plantings of the hard red spring crop there. The NAS crush came out at almost a record 198 million bushels. That had increases over 250 million pounds of soybean oil, but the stocks went up only 17, suggesting more increase in use for biofuels. We did see one private group come out and estimate the Brazil soybean crop at 158 million tons versus the USDA's 154, and the corn almost 132 million tons versus the USDA's 123. Soybeans out of Brazil continue to flow into the market at lower prices because of a lack of storage. And once we get into that second Safrinha Brazil corn crop, you're going to run into the same problem. So that's offering some resistance, not only to U.S. futures and cash prices, but also it's going to lower potentially U.S. corn and soybean export numbers. We also saw that U.S. hog margins are negative, which could actually reduce the demand for domestic meal. Palm oil is seeing competition from sun oil and rapeseed oil, and also lower Asian demand for veg oils in general. The Brazil soybean crop probably 55% sold now, and that also offers challenges to logistics and storage. The U.S. corn FOB basis continues to slide lower, and the lowest since November of 2021. Obviously, there's possibility of lower demand, especially on corn. We'll see what the ethanol data suggests today. The Motif corn is at new contract lows. Potential for Brazil corn imports, cheaper barley and wheat feed prices, and also the EU corn crop this year might be better than last year. The European model for the southwest U.S. is drier this morning than yesterday. GFS model continues to have rain over the next 10 days. Egypt bought 120,000 tons of Romanian, 300,000 tons of Russian wheat at around $260 a ton FOB. So much for a floor at $275. They also bought 236 metric tons of new crop wheat from Russia at about $255, which means the floor for new crop could be $250, and that is negative to the wheat market.